We recently spoke about the possibility of a short squeeze taking place within the crypto markets. In today's show, we'll address whether the bulls have the sustainability to continue price action higher, whether we're going to see continuation of this move, or is it a trap scenario? So you can actually vote in the poll, smash the like button, hit the bell notification, and subscribe to the channel while going through and voting. I'd love to know from you, is this a real breakout or another fake out? Click one of those over there and we'll review that just now to see what most of you think, the audience. So a lot to look at in today's show. We did get a big spike up over here in the liquidations, most of those coming from the short side. And that's what we said. There was a possibility of a short squeeze taking place. And that's predominantly based off what the stock market is doing. But crypto putting in a move a little bit sooner actually than what I thought. I thought it would only probably start to short squeeze some point towards the end of this week or maybe next week. But it looks like they may have already started the move. So we'll assess the levels that you need to look at. In a summary, for the most part, any coin that you're looking at, as long as it can defend yesterday's low, that's going to be the key line in the sand. Pretty much just want to say yesterday's low. You don't want to see price action fall back below that. If it does, then probably it is a trap, right? So we're seeing a big differential over here following what was earlier on in the week or the end of last week, the opposite, right? We had the majority stacked on the short side, very few on the long side, with about a 5 to 8% differential. Now we're seeing pretty much the same thing, about a 5% differential, but the majority stacked on the long side. So that means that if bulls want to run with it, they need to run with it now. They need to run with momentum, and they need to continue this into a trending move. Otherwise, of course, there are some warning signs, and the warning signs would be this. This is taken from the Bitcoin network flows, which is very, very similar to what we look at over here when we study the daily exchange volume. And this just shows the underlying demand for crypto and Bitcoin. And what it says over here is price action is bullish. And at the end of the day, I believe that price action trumps all, meaning looking at the actual candlesticks on a chart, forming high highs and high lows, or caught between a trading range between a high and a low, or maybe it's caught in a downtrend with lower lows and lower highs, right? That is price action trading, and price action rules all, because oftentimes the other things that we look at, the supporting evidence tends to only follow on later. Price action always tends to lead, and therefore price action is the most important thing. So as he says over here, price action is bullish, but is there real strength behind the move? That is the question you need to ask yourself, because if you're looking at the inflows, well, they're mostly neutral. Now, these can tick up if price action does start to continue to mark up aggressively. You may see the inflows run higher, right? So far, it's just been a tactical game to pretty much liquidate short traders. They're driving the majority of the move. Institutions are driving the majority of the move. And then we also have nation states which are bidding Bitcoin. And I said to the whale room community this morning, when I was updating them on the markets, is that it's exactly that. That's why you see Bitcoin dominance continuing to rise towards the upside whilst most altcoins bleed out, is because there isn't any real demand, right? There hasn't been any real retail interest. And I guess if you have to nitpick for any sort of a bearish case scenario, it would be that. The bearish case scenario is that there haven't been any real retail. Now, no, you here, I'm here, we are retail, but we a special select few, right? This is not the masses that we've seen in 2017 and 2021, and therefore we need this to come towards the upside. So the easiest way to do that is when I give you a trade today on the show live, make sure you stay till the end for that, send that to 10 other people, and then we'll bring the masses in, right? So we could squeeze, as per this, we could squeeze bears all the way to 114,000, but if real inflows don't climb, then there is a very, very real risk of a bigger retrace. And that's pretty much just another alternative viewpoint to this chart, which is the daily exchange volume that's been going down. Now, we've said, yes, we put a low, we put another high low, and then we put a high high for the first time. And now we're coming all the way back down, bleeding into the zone. And this is really the level that you want to hold. You want to see this daily exchange volume closing between about 32 and 35 billion for the next couple of days, forming a nice strong base and prepping for the move towards the upside. If Bitcoin does break out in a big way and moves into price discovery, that could possibly bring the masses. You are going to be capped by that RSI, which are currently coming into the first resistance line. This is a secondary resistance line. It's not the primary one. The primary one is the white one. So if you can start to break and close above this, a single candle close above this would ignite a pretty large move. And the price movement that you could experience from here to here is going to be pretty significant, right? That's your RSI, your relative strength index, on the weekly time frame. So we have a nice reversal candle that occurred last week. We highlighted that yesterday on the Monday show following the weekly close. And therefore, basically any price action that just consolidates around here is most likely going to resolve bullish towards the upside, with a minimum target between $125,000 and $135,000, right? Depending on when it hits. That's why I say it depends. If it hits this week, you're looking at about 130,000. If it hits in a couple of weeks' time, maybe it hits, somewhere in July, this thing could run as high as about 135,000. So that's what we're looking at over there on the high time frames. We spoke about this being the line in the sand. Pretty much if you're below the yellow line, it's mostly bearish. You have to be cautious. If it's above the yellow line, it can be bullish. We spoke about the Wyckoff distribution schematic, which again, we said was clearly a hypothesis, which we would love to see invalidated by the bulls. And how do the bulls invalidate it? Well, close prices higher and bring volume back into the game. This is why, as of today, we still need to remain relatively cautious, because yes, we had a higher candle close and a strong candle close, but the volume remains low. And this is why I've said your invalidation can remain pretty much under yesterday's low, because if you take out yesterday's low, what does that mean? That means that once again, you would be deviating back into the trading range. So as long as you can remain above yesterday's low, you're above the trading range, you're above the yellow line, volume still needs to come in. Hopefully we get some increase in volume as price moves towards the upside. So for now, bulls have everything going for them. They just need to continue to defend this key level at about 106,200. That's the important zone right above yesterday's low. Very, very, very important. So we could see some chop, some consolidation. And in fact, that would actually be really bullish, right? If you do see a trading range that forms between these highs and lows, the longer that you spend over here, the bigger the move that you'll be setting up for later on in the year. But we'll cross that road when it gets there. So again, risk factors, low volume. Therefore, this hypothesis theoretically is not invalidated yet. I think it will get invalidated, but it's not invalidated. Remember what it says over here, the test, which is what we're looking at now. This is the test phase. The test following the upthrust after distribution checks the demand at the high price levels and often occurs on low volume, suggesting the absence of strong demand. And then you enter into phase D, which confirms the distribution hypothesis. The price fails to reach the previous highs set in phase B and C. Have we reached the previous highs yet? No, right? You've come very, very close, but you haven't reached those previous highs yet. And again, that's part of the reason why it's not invalidated. If you can reach those previous highs, continue to close there, volume comes back in, then you can just cross this out, invalidation. Remember, we're not biased over here. We're just looking at both sides of the coin and trying to attempt which side is more likely to land on heads or tails, right? That's all that we're doing over here. We're looking for the best opportunities, and as long as price action holds above yesterday's low, it's good. And we spoke about that as a potential for bulls taking control in the short squeeze, also based on this chart over here, which we said simply it's trend. Trend trumps all, price action trumps all, high highs, high lows, price action above the 3, the 9, and the 30 moving average, all angled towards the upside. Although the 30 has a very, very light posturing, it's not angled aggressively yet. That's where you get the big, big, big moves. And therefore, we would expect this is going to probably resolve towards the upside. So what you may be doing is you may be setting in the low of the day with a couple of candles that are red over here. And then you could see bulls take back control. And then we'll find out, are we about to start a trending move, or are we still chopping about? At the end of the day, where can you expect the cycle top? Really, really nice analysis from Benjamin Cowan over here. Now, it doesn't have a massive hit rate because we only have 3 examples to look at. But historically, what we've seen is that the cycle tops occur when the 200-week moving average, which is the white moving average, this white line that's running up over here, as soon as that simple moving average crosses above the prior all-time high, like you can see that occurred in 2014, that was pretty much your cycle top. You can look over here in 2017, as soon as that 200 started to cross back above for the first time, above the last cycle's all-time high, that marked your cycle top and you went in for a major correction. And then we have the last one over here, which was 2021. And therefore, if you look from an observation standpoint, this could be the phase where things start to get crazy. But this is similar to the pi cycle top indicator, which looks at 2 moving averages. I think it's the 111 and the 350 day, and you need to pull the 111 moving average above the 350 simple moving average. And for that to occur, basically Bitcoin has to trade over like 200K. So I don't know if we're going to get that this cycle, but I think it's interesting food for thought for the high timeframes. Now, the only chart that matters, right, as per the clickbaited title that we always get you in here with, is the M2 money supply and its direction, right? Now, if you look at this tweet over here from 𝗙𝗘𝗔𝗧𝗪, very, very, very interesting. He says the M2 and BTC are directionally correlated about 90% of the time. Basically, if M2 money supply is moving up, then so will Bitcoin be moving towards the upside. But what you have to consider is that the magnitude of the move is not always correlated. And you can see from below, right? Because the purple is the M2 money supply. Like look over here, back in 2013. Let me just change the view over here so my head doesn't block it. But if you look at that highlighted period over there in 2023, the purple ran magnitude-wise very aggressively towards the upside, and Bitcoin didn't chase it that hard, right? And the reason that I mention this is because we can easily throw those types of targets on, right? 200K, 300K in order to get the pi cycle top indicator to flash off, things like that. But really you need to look at where things will be capped in terms of momentum running out. And therefore, you don't necessarily want to chase for a 200K price target, but you're looking at the RSI, which could meet resistance over there. You're looking at things, of course, like the M2 money supply, which tells you directionally, yes, price should continue up, but magnitude-wise, it doesn't mean that Bitcoin necessarily needs to trade from the black line all the way to the top of the purple line and play catch-up. It just means that directionally, it's giving you a bit of a better indication of where price is going to go. So pay attention to the direction only, right? Currently, the direction is bullish in alignment with what we're seeing with the trend, which is towards the upside. Now, you just don't want to break back inside the trading range. This still is relevant. This is pretty much better summarized with the yellow line. That's your line in the sand. The yellow line, yesterday's low. You break back below there. You broke back into the trading range. Potential double top over here as a local double top. You haven't taken up the up thrust after distribution. Those are the levels to watch, right? So we're going to have a lot of answers in the next couple of days as to where things go next. Very, very, very interesting based on what the stock market is doing, which we'll review just now. We still believe that it's likely that you're probably going to continue onwards and upwards, right? So full bullish posturing over here. Our other yellow line that we have over here refers to the RSI pivot level. So again, if Bitcoin breaks below yesterday's low, not only will you be losing the 9 and the 18 exponential moving average, and you would have essentially a bearish engulfing candle, especially if it happened today, but you'll also simultaneously be losing this horizontal yellow line, which means as long as Bitcoin is below that level, your RSI will turn back down. If price holds above this level, your RSI will continue to trend back up. So what I think is most likely, now don't quote my little LARP lines over here, but any pullback over here, I think will just be setting in the wick low of the day. And then I do think that probably either going to consolidate or you're going to have continuation, but I don't think that you're going to take out that low. At least that's on my base case for today. So we saw the short squeeze. You can see, look at all those levels taken out on Bitcoin. This is where a lot of the liquidity was. You are forming liquidity on the downside now at about 104,500. There is some liquidity over there. Let's just review where that is. So if you did go for that low liquidity now, you would be taking out that low. Now, it's okay to go for that liquidity later. I just wouldn't want to do it today. So if you have a continued run up, something like that, and you have to throw back a little bit and you put in a high low, I think that's okay. I just wouldn't want to take it out immediately, right? If you want the bullish case to stay alive. So if we look at the deltas over here, which we drop in the Whale Room Discord under the institutional chart section, any of you can get that over there. We're giving you the high block capital information. We're giving you as well trading light, which gives you where the majority of the big orders are situated. You can see the following. And this is part of what formed our thesis for the short squeeze, was all of this was negative yesterday, right? Now today, it's gone positive, which means that people are longing a little bit late. They're trying to long the breakout, which can work, but it's oftentimes very, very, very dangerous, and you have to be aware of that. So you got on BTC, positive delta, ETH, positive deltas, Solana is positive, SUI is positive. We have Sonic, which went positive and then flipped back slightly negative. PopCat is also positive, showing most of the market participants are currently running longs, and therefore liquidity is now starting to stack below for dip buyers, right? The dip buyers have set their orders at this point of control over here at about 106,656, which theoretically would keep you above price action, right? Above the invalidation level over there. So if you look at that again, let's just double confirm that. where do we have the level over here? Let's just quickly go. So we have 106,500. That is 106,500. I'm not even sure that you're going to drop that low. I don't think so, but that would drop it as far as this, which would find support at the 9 and 18 exponential. So that's pretty interesting. I don't think we're going to go that low. I think if the bulls are going to run it, it'll have a shallow dip and continue up. So we looked at total last week. We said come back into the bid zone, falling wedge over there, breaking towards the upside. We now have that confirmation of the break. That's on total 1, total 2, total 3, all the same thing. Others also doing the same thing over there. Now what you're looking at is you want to reclaim some of these 50% levels. So now that we have a confirmed high and low, you can get extra confirmation that you're in an area of strength if you use your Fibonacci tool and you just mark from the high of the recent move to the low of the recent move. And all you want to do is outline where that 50% level is, which I've highlighted in the blue box. So if you can start to get about 263 billion, that is, that will be a sign of strength that bulls are really, really starting to take control. So again, similar to, let's go back on this chart, similar to the declining volume that we see here and here and here, confirmed by these 3 charts, we can view it in a similar fashion that there is always that risk, right, of a bull trap scenario if you reject from here. Probably a good time to go and review our polls. Let's go and see what you guys said. So on our polls over here, is this breakout? Is this the real deal breakout or another fake out? 1,215 of you have voted so far. Let's go. The one I click on, don't take my word for it. Again, I'm looking at the probabilities, but 65% of you have voted over here, real deal breakout. 34% of you said fake out. Now, again, the TA suggests higher, bullish. Everything looks good. The at least if you're using the other part of your brain, it tells you over here volume is low, which I guess is part of the TA, and there isn't real retail. That's the only problem. That is the only problem. But again, look to the candlesticks first as the ultimate source of truth, right? So if the price action can get above this 50% level over here, good, bullish. Then I start to ignore things like the volume and everything. So let's look at the other ones over here just to get some perspective on these. You need to get above the white line, which is exactly where you've rejected right now. The first test often will reject. That's 882 billion for total 3 for your altcoin sector. So if you can start to close above there, it's going to be looking absolutely phenomenal. Let's have a look at total 2. Total 2 obviously giving a heavier weighting to things like Ethereum, which have performed really well. And look at that, right? Closing above that all-important 1.19 trillion, which is your 50% level, and in fact backtesting into that and holding that as support. So that's good. Let's look at the total cryptocurrency market cap to also see what this one says. And this one's moved even stronger because this has got including Bitcoin. So you can see that, is it altcoin season? The transition, what is that thing called? The let me look for it over here. It's called, what do we call it? That I'm going to type in on Google. The path to Altseason, the path to altcoin season. Let's have a look at this. This one over here, right? Okay, let's click on that and we'll open that up. Alrighty, is it altcoin season? There we go. This one over here. We'll make it nice and big for you as well in new tab. There we go. Okay, perfect. So let's throw this into the mix over here. The reason I find this interesting is because of this. Okay, so typically Bitcoin moves first, right? So you got total 1, which includes Bitcoin. That's why the total 1 market cap is already way above the 50% level. Then you start to see a rotational game. Money flows into Ethereum, but it struggles to keep up with Bitcoin. Ethereum goes back and forth with Bitcoin. And then there's this overlap phase, right? Bitcoin's ahead, then Ether's ahead. Bitcoin's ahead, then Ether's ahead. They like bob and weave back and forth. And then eventually you have Ethereum completely outperforming Bitcoin. And then in the price cycles, at least we heard talks of the flippening, Ethereum's market cap flipping Bitcoin. I don't think we're ever going to hear those talks again. But nevertheless, the path to altcoin season tended in the past to follow these phases. And history does often rhyme. It doesn't always repeat, but it rhymes. And the question is this time different? Which a lot of us got to a point where we thought maybe it is different. But when you look at this, well, total 2 is the next mover, which shows that it's got a lot to do with the ETH weighting over there. And then you got total 3, which you would expect that as you transition through this and ETH starts to outperform, then we'll start to see a catch up from total 3 and then from others. You can see in that order, there's more and more work as you slide down the risk curve over here to reclaim that 50% level. Anyway, I think it's interesting. So we took all our trades. I told you guys, there they are. The only one that's down is WIF, which actually that one we took quite a long time ago. Quite a large position relative to the rest. So good to see it's only about 4% of the way getting back into the profit. And then the other one that's in the red is the cross margin trade, which is just a hedge, right? So that one would be expected would be in the red. All the other trades that we took on Saturday and on Monday, I remind you of the show that I did on Saturday. And I said, go back and look, you still had the opportunity to get into these before things moved. Now they've moved a lot, up 40%, 21%, 42%, 15, 10, 10, 10, 14, 17, 141%, 109, and 80% over there. So some really, really good trades over here on Pinex. If you do want to follow along, there is a link in the description below. Feel free to sign up and use that. I'll let you know if there's an opportunity to open any more. But for now, those are set. Now, the next chart that you want to look at is this. So you're focusing on total 1, 2, 3, and on others. You want them to reclaim and hold above that 50% level. That's your job for the week. Monitor that and make sure that those things are holding up. If they are, then expect that maybe this is a bit of a lagging indicator and you will actually see daily exchange volume go up, which means that the Bitcoin network flows will probably also increase and that will follow price. Remember, price action trumps all. Price action comes first. Next, we spoke about the possibility of a big breakdown over here. Massive breakdown in USDT dominance. And look, you can't expect that it's going to go down like that. As you can see over here, it does chop about, right? So you can expect that it can bounce around back and forth above, so above and below that trend line, above and below that trend line as it leads onto the way down. But we have to use the lower time frame to get a little bit more technical. Now, the technical levels that I'm looking at is this. I'm viewing this as possibly a very, very big shakeout, because if you get a fake out on this, a fake breakout, that would equal the shakeout for the rest of the crypto market. This going up means everything else goes down. This going down means everything else goes up. So you had a clear trading range. There it was. You got the low, you got the high over there. You, of course, broke out, came back, held that trend line, rallied to the top, and then you broke down. Yesterday, this was a strong confirmation that things were going to start to rally. So we have some key levels. I've marked out a fib retracement from the high to the low of the move. So if you've taken, well, from there to there, where is our 50% level? Here's our 50% level. Therefore, that is going to be a very, very clear level, similar to what we looked at right now on the total 1, 2, 3, and others charts, whereby you want to maintain above the 50% level. What you want to see over here is this maintained below that 50% level. So any little bounces that occur over here, and I'm pretty much just going to highlight this whole area because this was your range high and it lines up with that 50% level, and it's pretty much right at the breakdown point. Of course, you don't want to get back above that. Otherwise, prices may go lower. So if USDT dominance rallies up, even if it spikes a little bit higher into this region, but it can't maintain above that 50% level, that's probably where you're looking for your next lower high. So if you missed any of this pump, that's going to be the area of interest where you're looking to go long on your favorite, whatever your favorite coin is over there, and your stop loss, let's rather put a tick. So long over there, stop loss at the white arrow over here, where X marks the spot, or the little asterisk marks the spot. So stop loss would be above there. That's going to be the equivalent of every other coin holding yesterday's low. As long as the other coins hold yesterday's low, you expect USDT dominance should remain underneath that 4.79%. And hopefully, from the bullish perspective, hopefully you don't even spend too much time up here. Maybe one quick little spike and then some acceleration towards the downside, towards the yearly open. And that takes ETH to our target of 3,300, which we've been waiting for quite a long period of time. So we'll address ETH as well. So that's what we're looking at over there. I think that's covered really, really nicely. We spoke about the expansion and contraction phases marked by the Bollinger Band with percentile, which is starting to get lift off over here after a long period of consolidation. And the good news is it's now above the middle Bollinger Band, which lines up where, right? The middle Bollinger Band is right over here at 106,700. So if you can flip that into support and you get expansion over here, that could drive the next big move towards the upside. Now, remember that middle Bollinger Band lines up at a similar level to what we outlined over here in Whale Room, which you can see 106,556 is where a lot of those orders are. That's 300 Bitcoin ready to be scooped up at that level. Buyers are already waiting to get in. So what would that look like on this chart? USDT dominance might do something like that, a little bit of a spike up. Then we can start to get, real, what do we call it? A real spread over here between the red 50 and the 200. If this can start to accelerate down a little bit quicker, that's going to drive a pretty aggressive downside move on USDT dominance, which should create a nice spike in everything else. So dominance is an important thing to look at, both USDT dominance as well as the Bitcoin dominance. And like Benjamin Cowan says, Bitcoin dominance has nearly reclaimed all of its previous losses that it had over there, right? People keep trying or keep thinking that they're contrarians. And I always say be a contrarian, but only at the real extremes of the move. And he says they keep trying to be contrarians by calling the top on the Bitcoin dominance and calling for altcoin season. But the real contrarian view is to just keep assuming that Bitcoin dominance will just keep going higher. And that's absolutely true, which is why it's so important that any chart that you're looking at, like ETH BTC, you're sourcing out a select few coins that really do stand a chance to break out against Bitcoin dominance. Otherwise, you're just losing money. At the end of the day, you're just losing money. All right, so levels to watch for. We spoke about Bitcoin dominance being in a trading range, and we said that, if it were to reject over here, the most likely place to reject would be 64.98%. Between the 786 and the 886, which is in this block over here. So you're grinding into this level. It all depends on how you approach that level. If you grind into that level, chances are it's going to break up higher. If you come in for the first test like that aggressively, then you can expect a sharp reaction. So right now you have to lean slightly more bullish on the Bitcoin dominance. And the next big level to watch for is, now this is a low time frame, 886 and 786 fib. But when you look at the real high time frame, 886 and 786 fib is going to be this one over here in the pink box. So if that's measuring this entire trading range over here, right? So from high all the way down to low, therefore you'd be looking into this area as the next major likely zone for weakness. Now, maybe Bitcoin runs to about 130K in that short environment, right? That short move from here to here. So don't be too quick to exit all of your Bitcoin. That's all that I'm saying. But if you are going to risk any of your Bitcoin, look for things that look relatively strong. Now, I readjusted this again because yesterday we spoke about ETH BTC, it was getting really dangerous in this territory. Prices were coming low. And then we said, maybe we must just focus on this as a horizontal range. But at least, bulls struck back in the final dying hour and got a bit of a move up. So you're still maintaining that potential bullish posture, like a bullish wedge over here, right? Price coming towards the apex over there. If you can start to break and hold above, that will start to look like a big breakout. And then that's when you would essentially get your overlap phase leading into ETH outperforming. Okay, so ETH still looks really, really good. There's some good opportunities over there. If you look at the staked ETH, it is increasing. This just helps to fulfill the narrative of the rotation. When you start to see charts like this, it is still rising, right? So it's still moving towards the upside. But this was probably one of the most interesting charts that I've seen all day. And it's from a guy named Ant, and he says, ETH hit a brick wall at the 360 moving average for the second time since May the 29th. Now, what's interesting about this is like where you look at fair value, ultimate fair value for ETH is this 360 moving average. It's the weighted point where the actual pain of the holders who have committed their monthly, daily, weekly DCAing or otherwise for the past year feel it the most, right? This is where they come back into break even. This is where they have to decide, do I exit at break even or do I allow this thing to run up back into profit? So anything that's deep underneath that 360 moving average is really, really discounted. And anything that starts to move above over there is the premium zone where you look to take profit. So some clear levels over there. He also highlights over here on this, the 720 moving average, which is the light blue one, and then the purple 180 moving average over there. And that's that's going to be a key support area. The levels that comes in at is just put a line in the sand and say about 2,500. So you could put in a massive SR flip at these moving averages, while simultaneously it lines up with some of the other bullish factors that we're seeing, like a potential for ETH BTC actually putting in its next leg up. Now, typically what you see is 3 phases, right? Usually you put in that similar to an Elliott wave, wave 1, wave 2, wave 3, wave 4, and then you put in your final bullish phase towards the upside. So If this is going to be the next breakout over here, this can move very, very, very aggressively. And we need to look to what the ETH/USD pair shows. And we know that the ETH/USD pair has been grinding into essentially an ascending triangle, right? There it is, ascending triangle. So even if you do keep coming down over here, this grind is ultimately going to resolve towards the upside. And the longer you grind over here, the bigger the breakout. And the way that you can deduce that is if you just look over here, we had a nice move up, consolidation. Look how big that move was, right? Now, if you continue to grind in this area, you can expect that that should lead towards our target, which was the early open 3,300. I don't believe that this is going to grind out this whole area over here into the end of July before breaking out. I think that there's a chance that this could break out very, very, very soon, pending how this weekly candle closes. And that's based on this. It's another thing that we looked at a whole lot. I'm going to just quickly draw it over here. We came into a key range high, and we said the fourth time is usually the most likely area where you'd experience a big breakout. And this was 1, this was 2, this was 3, this was 4, and that one failed. This one failed, right? Fourth time breakout failed. Now you're coming in for the fifth time. So you're just weakening this resistance, which means, again, as long as you can maintain above yesterday's low, even if you get a little bit of a chop and pull back over here, this is most likely going to resolve very, very, very soon towards the upside. 3,300, that's the target. My expectation is a move up to 3.3. I think there'll be a lot of profit taking over there. I think that price will then throw back into this area, find support, and then you can go leverage long if you want, right? You can margin long your spot ETH. So we've been long on spot ETH since 1,500 around here. Then we spot longed again at about 17 to 1,800 before this move up. And we're still holding that spot long. I think the safest area to start to margin long some of that ETH is probably following the move to 3.3. The throwback down probably won't go as low as here, but I think the throwback down into about 2.9, 2.8 is probably going to happen after the 3,300 move. So that is what we're looking at, right? A lot of stuff to cover today, a lot to cover. Now, okay, let's quickly check this chart. You know, we look at the Monday range. We've done that a whole lot. Right now, you're breaking back into the Monday range. So the DGen traders might already be initiating some short trades over here. Personally, I'm not going to take the short trade. I think it's a little bit risky. But if you were, you know, stop loss above there, you broke back into Monday range, I would take most of my profit at the mid range and ideally flip long over there if you haven't already on ETH. That's 2,585. Again, let's go back over here. Where is the key SR flip level based on the 720 and 180 MA as per Ant's tweet over here? Right over there, right? 2,543 right now, up to 2,590. Let's call it 2.5 to 2.6. And what I just say over here, 2.5 to 2.6, if you throw back into the mid-range, that's in that area, 2.5 to 2.6. Straight into the Monday mid-range, 50 EMA support on the hourly. You kind of want to hold that area, and that's where you're looking for the next move up. Okay, cool. Let's quickly just see in terms of some of these momentum oscillators. We did look at that yesterday. Let's just quickly see over here on ETH. Okay, so 3-day money flow is moving towards the upside. VWAP is also curling up. VWAP's already up on the 2-day, starting to turn green over here. Money flow also crossing the 0 line on the 2-day. Same thing on the daily. Everything looking strong and up over here on the daily. Dailies are probably the most important to me. 12-hour, all looking good. Everything super strong over there. 8-hour, also all good. Everything looking strong. VWAP cooling a little bit over there, but otherwise all up and strong. Okay, 4 hours is where you start to see things changing up a little bit. Yes, momentum oscillators are a little bit heated over here. Money flow is still up. VWAP coming down. It could just be cooling down for a reset. So theoretically, any pullbacks over here are probably good dip buying zones where you're looking for the next major move up. All right. So I don't want to overwhelm you with too many things. Just know, I guess if we do follow this phase over here, you know, maybe there's still a lot left in the tank for this bull run. I'll just be taking it week to week, taking it really, really carefully. We're not done yet. I do want to also just let you know there is a chance that tomorrow I may not do a show. Just look out for it. If I do, I'll pre-record it just before flying out. I'm going to be going away for a short while. Hopefully the internet is good enough over there and I can still keep you guys up to date. I do plan on doing shows. It's just tomorrow I'm going to be flying during the time zone when I'd usually be live. Okay, cool. Alrighty. So if ETH does do well, remember I brought this up a couple of weeks ago, maybe a month ago, Super AI Conference, one of the biggest AI conferences is coming up in Singapore. They're one of the crypto hubs of the world, 18th to 19th of June. So I told you can also look to some of the AI coins. So let's quickly go back to the AI coins and just see more or less on the dailies how these things looking. How is 𝗬 looking? Okay, we'll zoom out over here. Let's quickly see. So 𝗬 needs to reclaim the 50% level. Now, if total 1, 2, 3 and others reclaim that 50% level, you can expect that most of the other coins will do the same thing. And that's where you start to get rapid acceleration and these breakouts. So you can look at a 58% move. So then AI will start to explode. Render still hanging around roundabout where this key range lows. So this one reminds me very, very similar to the daily exchange volume, which has been coming towards the downside over there. You expect a base to form. Let's quickly see grass coming towards the apex. We said expect a move soon. I guess if the rest of the market breaks out, the most likely outcome is a move towards the upside. Fetch AI, we did have a look at this yesterday, but we'll just double check. Okay, so also falling wedge, similar again to this, contracting into a pretty key level where you expect as long as it can keep holding around here just for a little bit longer, you should soon start to see a breakout. So all of these AI things look like they're basing out and getting ready to move. With the AI conference coming up, maybe this will drive the next move. One of the ones that we spoke about previously was we had, I kept the chart over here for you, OpenGPU. OpenGPU, also one of the sponsors. Where are they on here? They're one of the main sponsors of this event. This is, I don't want to necessarily use the word dark horse. I just think it's undervalued. I think that had a fair launch and the fundamentals, the price will catch the fundamentals, and they're one of the main features at that conference. So OpenGPU, if you guys are looking for something low cap, check it out. You can look it up over here on CoinMarketCap. Only a $4.6 million market cap. And again, you can see the chart is starting to move towards the upside. High highs and high lows is the name of the game. So I think that put AI on your watches. We know that when we have had a little bit of a what do you call it? A little bit of an alt season with any of the BTC dominance drops. It's been meme coins and AI that have been the top performers over there. 1 or 2 real world assets. So I think those are some of the coins that you can look at. What on earth is going on with this chart? 𝗕𝗃 on 𝗕𝗃𝗁. Have 𝗕𝗃𝗁 rugged 𝗕𝗃 as well. Look at that. This is absolutely unbelievable. I'm just going to delete it. I can't even use that. Let's just get a new 𝗕𝗃 chart over here. We'll go to 𝗕𝗃 let's go with Binance 𝗕𝗃, and we'll just move it back in order. There we go. Top of the list. Okay. So if ETH does well, you'd expect that 𝗕𝗃 should also do well. In order to determine if bulls are regaining real momentum and are actually going to run it, same thing. High to low of this correction, you want to reclaim that. So you can see ETH has just rejected off that level, started to put in a pullback. 𝗕𝗃 hasn't even hit that level yet. As soon as it starts to get above the 30th of May candle that led to that downward move over there, that's going to be where you start to get some acceleration. Let's have a look at MOG. Also looking really, really good. We covered MOG coming into support over here, holding the trend line, putting in a nice move. Exactly the same thesis over here. Get back above the 50% level, which is exactly where you're currently rejecting. So you might need to spend a little bit of time over here, maybe chop about a little bit more, but it's all the same real patterns that you're seeing. So without drawing too many lines, and we'll clear that up to eliminate some of the noise, there's these falling wedges all over the place. Falling wedges coming into key demand. So falling wedge into support, triple confluence. A, you have horizontal support. B, you have a bullish chart pattern, which is a falling wedge. C, you have an upsloping trend line over there. And there's a lot of things that look like this. All you need to do is you need to look for it, right? Spend a little bit of time and look for those opportunities. Very, very, very similar over here on, of course, Brett. So level to reclaim for Brett is the breakdown level. Most of these breakdown levels occurred on Thursday, the 29th, or Friday, the 30th of May. That is 0.068 cents that it must get back above. All righty. Okay, so guys, keep an eye out for that AI conference. Let's see if anything major happens over there. I think it's going to be, it could be a bit of a catalyst if the market's doing well. Okay, let me know in the comments. Let me know in the comments what else you guys want to have a look at. We should have a look at the stock markets as well. Usually we go in the other order where we start with the stock markets, but today let's have a look at the stock markets. Before we do that, I do want to just check as well how your poll's looking. Okay, we got more voters in. So it looks like about 64% of you believe that this could be the real breakout. Again, for those 64, I want you to remember that the volumes are low and there is always a possibility for Wyckoff distribution schematic. Then for the other ones, the other 36%, I want you to also think about price action trumps all. And if you're starting to see Bitcoin, you're starting to see USDT dominance breakdown in this massive bear flag over here, while simultaneously you have a very, very strong supported trend over here with the 3, the 9, and the 30 moving average, which has oftentimes led to some of the biggest moves. You don't want to be offsides, right? So I'm trying to, you see how I try to help both sides over here? I'm trying to help both of you to see things from the other person's perspective. And then you need to make your decision making over there. So for example, if there were high volume, what would I do differently? So what have I done? I maintain my ETH spot positioning. That's it. That's what I've done. Am I levered to the freaking gills over here on ETH longs? No, I'm not James Wynn Long with 40x leverage with my whole net worth. But I'm maintaining a spot position. That's what I do. If the volumes were coming in and all of this was looking absolutely hunky-dory and amazing, and I thought retail were coming back in a big way, maybe then I'd be levered to the gills. But that's not the case right now. So that's how you need to think about it. That's how you control your risk. Is yes, I still have my long exposure, but I'm not levered up on 40x leverage in case that volume is telling us the truth and there is going to be a trap scenario. All right. Cool. All right, guys, let's go into the stock market, right? The stock market over here, grinding towards the highs. Now, it's going to be exactly the same principle for any chart in the whole world that you look at, any chart in the whole world. If you have an all-time high, okay, all-time high, price came up at one point in time and it rejected. It came up another point in time and it rejected. And then maybe you put in a massive correction. You come all the way down and then price comes back up, breaks into new all-time highs. This is where breakout traders go crazy. They're all long that. Oftentimes there's a deviation. As long as you don't deviate, you can maintain that long exposure and you can expect that price is going to rip. As soon as you deviate back below prior all-time highs, you have to get out. Short trade, stop loss above, you have to get out the position. A lot of the times, that's where you'll put in a much deeper correction. So I don't know what's going to happen, right? I don't know what's going to happen on the next move. This is essentially the scenario of the stock market. You had 1, 2, and now you're coming in for the third one. And is it going to do this, shallow dip and just rip? Or is it going to do this? I don't know, but you should be prepared for both scenarios. Are we going to V-shape recover? Again, I don't know, but be prepared for both scenarios. So 1, 2, 3, we're coming in for the next one over here. We're only 2% away. We spoke about the hedge funds being offsides on these positions, which means that in the short term, you could create something like that. But once they get squeezed, once the hedge funds are squeezed out of their shorts and they have to cover those short trades, if you break back inside, that's a trap. Then you need to get out and be prepared that things could pull back further. How far could they go? You know, probably down back to about like 5,500, 5,600 over there. Do I think that we're taking out these lows? No, not necessarily. So if you break out and you hold over here, all long and strong. So to prepare for the A-B scenario A, let's just clean that up. That we don't need that over there. Scenario A, let's grab a little tool. Scenario A, breakout, consolidate at the highs, get ready for the next explosive move. Scenario B, fake out, break back inside, B, short trade it down, right? That's where you can start to short trade. In order to prepare for those two scenarios, I guess, yeah, get your accounts ready. I use BTC for the traditional stuff. 10% sign up bonus for any of you that do join over there using the link in the description below. And they're giving you 40% lower fees when you use that link as well that's below. So sign up over there. You got crypto, forex pairs, stocks, commodities, everything. That's where I'm trading things like NASDAQ, S&P 500, Tesla, etc. So we'll have a look at Tesla as well. Grinding into the resistance. Again, that's another thing. If this does grind and consolidate into this pink box in resistance over here, then you can weigh the probabilities much, much higher that you're going to explode. Then this is going to go much, much higher. It's all about how you approach a level. So let's go back to our example. how you approach a level. Okay, we got a line over there. It's how you approach a level. So test 1, test 2, we said S&P 500 3 tests came down. Okay, if you approach this level like this and you go straight through, almost inevitably this is going to draw back down. But if you approach the level like this, 1, 2, 3, it came down, comes up, comes up, comes up, comes up, and you do this underneath all-time highs, it's going to explode. Consolidations underneath resistance areas lead to big breakouts. Consolidations into support levels where price hangs around, support hangs around, leads into big breakdowns. That's the way that it works. But if you approach it, think of it like a bouncing ball, right? If you throw a bouncing ball off a 3-story building, the first test, if it comes in fast and aggressive, is going to bounce into maybe a lower high. But if you obviously hitting like that, it's going to stop. The momentum falls out and then it falls through the floor. So that's one thing to pay attention to. Anyway, let's go back to Tesla. Also, I do teach all of this in Whale School. For those of you that want the in-depth analysis, a lot of what we've just done now, but on every single topic under the sun, you got to join Whale School. So use the link in the description below over there if you do want to join over there to Whale School. It's free. You don't have to pay $2,000. You can join for free. All you have to do is use one of the links below to issue a user ID and verify yourself. So you can see all the different alternative exchanges. Choose one you don't have, sign up, make a small deposit, send them the user ID. They'll let you in for free. Okay, Tesla. Okay, so strong move down. We had the pink boxes, the ideal territory. It may have been front run. I won't necessarily say it's absolutely going to go back there. Totally depending on what the stock market does. But for now, above the 200 moving average, probably going to chop about and consolidate a little bit. Okay, you want to pay $2,000 for the course. How do you do it? You can do it. I mean, I don't know why you'd want to do that, but you can do it. You can do it. Just, I guess, contact one of the moderators and they'll send you the payment link. But if I were you, I would literally just go over here. You don't need to pay $2,000. Just sign up to a non-KYC exchange like Blofin, right? Very easy. Non-KYC, you can use any email address. If you already have a Blofin account, use another email address. Non-KYC, deposit $100 and it's your $100. We don't touch your $100. Give us the user ID for the exchange and you're in for free. You don't need to pay $2,000. Okay. All right, guys. Look, we've been live for, what is this, 47 minutes. That's too long. That is it from me then, folks. I'll see you all on the next one. I hope you have a lovely day, and we'll see if the breakout's real very, very soon. See you all tomorrow. Cheers for now.